Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session where we're going to be analyzing the most traded assets around the world, including currency pairs, including, of course, the Nasdaq, S&P 500, global indices, which have seen so much volatility this week. Generally speaking, more or less every tradable asset has seen a lot of volatility. I'm sure we've got a lot of very happy traders here. I know I'm one of those happy traders because we've seen amazing price movements. And of course, for individuals who are looking to speculate price movements, for individuals looking at more swing and longer term approach and methodologies to the market, of course, the dips in the market have given them amazing opportunities, which a lot of people have benefited from as well. So today, ladies and gentlemen, we're going to be analyzing a specific event. We're, of course, going to be analyzing inflation, which in just a few minutes is going to be released. In exactly 12 minutes, we will get the inflation release from America. That will create a lot of volatility as well. But because today's live analysis session is very unique, because we've got a session where we're going to have news released in a few minutes time. But in addition to that, we're also going to be partially looking at what has been driving so much volatility, what that volatility means, not only generally speaking for the financial trading market, but how can we use that information to be able to determine, okay, because when you're trading, in order to be a successful trader, you have to be able to predetermine how the market is going to move. So this is something we're going to definitely be speaking about. How is these developments within the market going to be able to allow us to be able to determine how potentially the market's going to move? And like I said, of course, in addition to that, we will be looking at the US inflation rate, which is going to be released today. Actually, we'll start off with the understanding the inflation release and today's news, because that is something which is going to be released just in a few minutes. We're talking about just over 10 minutes time. So what exactly is going to be released, ladies and gentlemen? We're actually going to get 4 pieces of information which is going to be released today. Now, we're going to get the monthly consumer price index. What is the monthly consumer price index? The CPI, consumer price index, is basically a basket of goods and services which remains the same every single month. It measures the price movements of those assets. And like I said, it never changes. It's not like the core PCE price index, in which it changes every single month depending on what consumers are purchasing. It's not like that. The CPI remains the same every single month, no matter where the demand is. But what the index will do is it will measure how prices alter, how prices change over the past 30 days. Now, depending on that, ladies and gentlemen, it will tell us whether prices have increased in value, and if they've increased, by how much, if they remained the same, or if they have decreased in value, and again, by what extent have they decreased in value. Now, because we are going to get the monthly consumer price index, then it will of course see the annual, so the yearly CPI, also adjusted. Now, in very simple terms, the yearly CPI is the inflation rate. Now, a lot of people have been confused over what is expected within the market, because over the past few days, it has really changed in terms of what analysts were expecting. Previously, analysts were expecting, just so everybody's aware, the current inflation rate in America is 2.8%. The market was expecting that to drop to 2.7%. They changed that prediction and actually confirmed a projection that inflation would decline to 2.7, 2.6%. At the moment, the current average projection for inflation, okay, we're looking at the annual inflation for the US, so we're not talking about the monthly CPI, is actually for it to decline to 2.5%. Now, if we're going to look at the past inflation figures that we have seen over the previous months, the last time we were as low as 2.5%, we have to go all the way back to October of last year. So we're looking, ladies and gentlemen, back 7 months. 7 months. So of course we have to take that into consideration. If it does decrease in value to 2.5% as expected, then it can trigger a lot of volatility in the market. Some people may say, why exactly has uh, projections for inflation uh, very quickly changed over the past 4 days? Because at first it was expected to be 2.7, then expected to be 2.6. Now we're expecting 2.5. And the reason for that, ladies and gentlemen, I actually share a screen for you, is because most of the market now, most economists, most politicians, including in America, so I'm not necessarily being biased in regards to this, because the US current politicians, current administration, including Trump, President Trump himself, has confirmed that yes, the global economy is indeed likely potentially to witness a recession. Of course, the US administration call it something else, a much nicer terminology, should we say. They call it a transitional period. Most economists and analysts, though, very simply are going to call it a recession, because it's very simply is a dip in economic activity. Now, because of that, ladies and gentlemen, we have seen stocks decline. For example, the NASDAQ declined approximately 25%. Okay, that is a massive decline. This is why at the very beginning of the webinar, we said for those individuals that are looking at more longer term methodologies, okay, and different approaches to the financial investment market, of course, there was a lot of benefits in regards to that. But we also, when looking at other assets, such as instruments, including oil, look at oil prices here, ladies and gentlemen. If I put this on a weekly time frame, we can see just in the past week and a half, ladies and gentlemen, the price of oil dropped up to almost 21%. Almost 21%. This has the biggest domino effect on inflation, because if oil prices are going down, then of course transport decreases, the cost of tourism decreases, the cost of production and manufacturing decreases, traveling decreases, everything in terms of prices decreases. Okay, even including more should we say, volatile assets, including food, drink, tobacco, alcohol, and so on and so forth, which see a lot of volatility. Yeah, definitely has an effect on that as well. So because oil has significantly declined, and to be honest, it has been declining, generally speaking, since Trump has actually come and has entered the White House and become president. He did advise that that was what he was attempting to do. He actually advised that he wanted the price of oil to decrease to 40%, sorry, to $40 per barrel. Most economists believe that's a stretch too far. Most economists now are currently indicating somewhere between $50 and $60 per barrel. But anyway, this is one of the reasons why, my fellow traders, that we're going to see, that we have seen the expectations for inflation significantly decline. Even if, ladies and gentlemen, the inflation rate comes in at 2.5%, that could be seen as something which is basically underachieving, because it's lower than previous projections. Now, what does underachieving mean? Underachieving, or coming in above expectations, will have certain effects on assets, and it depends on the asset itself. So for example, if we're going to look at the NASDAQ, which has actually been one of the most traded assets worldwide over the past 24 hours, it saw yesterday, ladies and gentlemen, I'll go to a daily time frame so everybody can see this. Yesterday, look at this massive candlestick, okay? Look at this massive candlestick. I'll measure this candlestick for everyone. The open price was here. The close price was here. That's almost 12.5% just in one day. That is the largest upward price movement in a single day that the market has seen in 17 years. 17 years, ladies and gentlemen. That is a price movement, a bullish candlestick that we haven't seen in 17 years. All right. Now, inflation, if it comes in as expected or comes in even lower than expected, then it can further fuel the upward price movements, because there's a lot of pressure on the Federal Reserve at the moment, because there is fear of a recession. Most economists believe there is going to be a recession. So if inflation declines to 2.5% or 2.4%, if it declines to 2.4%, then we're actually at what is known as the inflation collar, basically the lower end that we have recently seen over the past few years. If it does decline to 2.5%, 2.4%, then on one side, you've got a lot of pressure to say cut interest rates because we're about to see a recession. We want to ensure and protect employment, consumer demand, support the stock market, which has seen a ginormous collapse. Again, I'll measure the stock market decline, 26%, okay, that we have seen over the past 2 months. A massive, massive decline. So there's a lot of pressure on them. And then on the other side, because there is in the past been a lot of times where there has been pressure on the Federal Reserve to support the economy by cutting interest rates. And they have refrained from doing so very simply because inflation was too high. But if inflation declines lower than expected, then it becomes a one-side story, becomes a one-hand scenario. So if inflation does decline or comes in at 2.5%, then potentially it can support the stock market. Not just necessarily the Nasdaq, it could also support the S&P 500, the Dow Jones, or even equities across the global market, including, ladies and gentlemen, for example, the DAX, the French CAC, the Euro Stoxx 50, and so on and so forth. So like I said, it depends what asset we're looking at. One of the assets we're looking at is the stock market. Now, the other assets we're looking at, ladies and gentlemen, is, of course, oil, gold, and the US dollar. Now, in regards to the US oil, so crude oil, ladies and gentlemen, if inflation declines, a lot of people will be expecting that the Federal Reserve will start cutting interest rates. Also, that consumer demand may potentially increase slightly. We're already seeing a better scenario within the economy because there's been a 90-day pause on countries which didn't retaliate to the US tariffs. That's definitely something positive for the financial trader market and for most economies, except, of course, for the Chinese economy. So that potentially, ladies and gentlemen, at least in the short term, okay, in the short term, may potentially see upward swings. Gold, ladies and gentlemen, lower CPI is known to be something which is definitely supportive for gold. The last thing I also will say, because we're about to get the announcement just in a few seconds, ladies and gentlemen. How long have we got? We have 40 seconds. Okay. Last thing I'll say is in regards to the US dollar, everybody knows that Trump wants to bring the price of the US dollar down. Okay. We're not talking about making it look like the Turkish lira or the Japanese yen. Of course not. But to bring the US dollar down because they want to increase the stance of America as a manufacturing hub. So everybody knows that Trump wants the US dollar to decrease in value. If we're going to get lower inflation as well, then there's going to be lower inflation, which will have a domino effect on the Federal Reserve interest rate cuts, which also can put a lot of pressure on the US dollar as well. Now, ladies and gentlemen, just so everybody's aware, if ladies and gentlemen, we do have anyone who's got questions, you're more than welcome to ask as many questions as you like on YouTube, on our social media, on Twitter and on X, as you like. And I, of course, will answer all questions as well. So, ladies and gentlemen, we've just now got the announcement. Let's start with the NASDAQ. Let's go onto a 1-minute chart. The NASDAQ has significantly, again, increased in value. Guys, I know I've got a lot of happy traders here. Just in a few seconds, I mean, it's just been released, so we're talking about just in 10 seconds, ladies and gentlemen. The Nasdaq has increased by almost 0.80% in just a few seconds. Let's look at the actual announcement. Let me confirm to everybody what the announcement is. The announcement, ladies and gentlemen, was 2.4%. Inflation has dropped from 2.8% to 2.4%, lower than that which was expected. The core CPI came in at 0.1%. That's lower than expected. The monthly CPI read minus 0.1%. That's 0.2% lower than expected as well. Actually, the last time we saw minus figures for the CPI, ladies and gentlemen, was going back to July of last year. So we're talking about approximately 10 months, I think. So something which is very, very positive for the stock market. And like I said, look at this upward price movement. Even if we're looking at the S&P 500, S&P 500, which is less volatile, is also still seeing very strong upward price movement. Actually, it tends to be less volatile, but at the moment, it's seeing the exact same upward price movement as the Nasdaq. It's exactly as I said, ladies and gentlemen. It's exactly as I said. Inflation, if it came in lower, for the reasons that I stated, investors will further expose to the stock market. And that is what we have already seen. That is what we have already seen. What about in regards to oil, ladies and gentlemen? Oil hasn't seen much volatility just yet. I think that this might start to see more volatility when the US market opens. There's a good thing that I actually said oil may see temporary, not necessarily long-term, temporary upward price movement. We can definitely see here that regardless of the news, investors are really reluctant to expose massively to prices of oil. If we're looking at the US dollar, ladies and gentlemen, this is the US dollar index. Again, significantly lower. This, ladies and gentlemen, the US dollar index declined by 0.21%. I'll confirm to you the last time the price was this low, ladies and gentlemen, compared to this week, was back on the 29th of September. 29th of September, ladies and gentlemen. So that's going back in terms of weeks. That's going back, ladies and gentlemen, 27 weeks. It's been 27 weeks since the US dollar has been this low. We've, should we say, wiped off any earnings and any gains the US dollar has seen since the US elections, where Trump was elected president of the US. Again, one thing that I did say just before the announcement was made, or should we say two things that I did say before the announcement was made. The first thing that I mentioned was that if inflation comes in lower for certain reasons, and it's not my opinion, it's fact, it's economics, very simply, that the US dollar is negative for the US dollar. The other thing I mentioned is that it's very well known that Trump wants the US dollar to decrease in value. Okay. Why? Because he wants to bring the industrial sector back to the United States. In order for the industrial sector to be competitive, the US dollar needs to be cheaper, ladies and gentlemen. Somebody says, what time frame is this? This is a 1 minute time frame, ladies and gentlemen. So let's look at each asset one by one. We've got another question here. What about the employment figures? Yes. So like I said at the beginning, there's 4 announcements which were made. Okay, 4 announcements which were made. The 3 were in regards to the CPI, core CPI, and the standard CPI. All 3 announcements basically related to inflation. The other one, ladies and gentlemen, was related to the weekly unemployment claims. So in terms of the past 7 days, how many more individuals applied for unemployment benefits? Of course, the lower that is, the better. It was expected to come in at 223,000. And it did come in at 223,000. Now, for those individuals who want to follow this data, just type in HFM calendar like this. Actually, what I will say is I'll take you to the homepage so everybody can see exactly how to get access to this. If you go to the homepage, go to Tools and Education, go to the very right part of the tab of the menu. Here you can see earnings calendar. Earnings, ladies and gentlemen, will start next week. Keep in mind that that also will create a lot of volatility specifically for the stock market, but it can have a ripple effect on other uh, instruments as well. And just above that, you've got economic calendar as well. If you go to the economic calendar, you go to today, and we go to today's announcement as well for the US. Let's keep going down. There we go. Here's today's announcement for the US. You can see CPI, core CPI came in at 0.1%, lower than 0.3% as expected. Here it says that 2.6% was expected. Actually, the average, if we're looking at hedge funds, I'm talking about, I've taken the average from Goldman Sachs, Jefferies, JP Morgan, Citigroup. If you take the average of these main institutions, a lot of institutions actually believe that it was going to drop to 2.5%. Here on our calendars, 2.6%, that's not necessarily wrong either. Either way, it's lower than expected. The consumer price index, excluding volatile assets, came in at 2.8%. That's also very low. If we click here, ladies and gentlemen, you can also see the announcements over the past few months as well. And going back over the past few months, never, ever, over the past few months, never you can see a figure here below 3%. Let's go to the previous page. Nothing below 3%. Again, nothing below 3%. It just keeps getting higher and higher, of course, because we had that hyperinflation from COVID. The last time, ladies and gentlemen, it was below 3% was March 2021. So we're going back a very, very, very long time ago. Anyway, I want to actually start to analyze these assets one by one. Okay, I want to start to analyze these assets one by one so people have a good understanding of what the bias is for these assets. Okay, now here's a 2-hour time frame, and we've got an average price movement. It's an exponential moving average of 75. Now the exponential moving average, ladies and gentlemen, acts as a trend line. Also, what people can do is, in addition to that, they can also add a relative strength index. I've got it on a period of 18. Now here we can see we're above the 50, we're below 75. That brings us to an area of 59, just below 60. And if we're looking at the chart itself, we're also above the 75 bar exponential moving average. So this gives us a bias that, or a bullish bias basically, that buyers are starting to regain control of the market. But what people also should be cautious about is that regardless of that, ladies and gentlemen, the RSI is pointing downwards, and we're looking at a corrective wave. Okay, now this corrective wave at the moment is nothing more than a retracement, which is an issue. If we're going to follow wave theories, retracement could fall as low as this level, which is basically the resistor level being flipped onto the support level. That, ladies and gentlemen, will also come in line with our trend line as well. So this level, even though we've got positive price movement from the NASDAQ, and to be honest, people that had take profits from before the announcement probably would have already hit their take profits anyway. But of course, we want to analyze because people want to keep trading, so people know what to take into consideration going forward. Somebody says, can we look at the Dow Jones? Yes, of course. Another person said for us to look at gold. Of course, I will also look at gold as well. Guys, keep in mind the volatility, because it's only been announced for 9 minutes. Volatility across the board will be up and down for everybody, but of course it will stabilize and we'll start to see a direction slowly. So retracement, if we're looking at technical analysis, can potentially decline to this level. Now, whether we're going to see a decline to this level or if we're going to lose momentum because the announcement is positive for the NASDAQ, let's say we're going to lose momentum, downward momentum, and we're going to start to regain upward momentum. A lot of people take into consideration if the price increases above 65%. Okay, so here's the Fibonacci tool. The Fibonacci tool is useless. Okay, if you're going to speak to economists, if you're going to speak to financial advisors, it's useless. It's random numbers. Uh, no impulse wave is the same, no corrective wave is the same, so you can't use the same numbers. But what a lot of people look at is price momentum. They say, okay, it's declined by a certain amount, but if this much is regained, then that indicates there's enough momentum to say there's enough demand, there's enough buyers, and they're pushing the price high. So I'm going to start to take advantage of that. So this is 65%. So a lot of investors will take into consideration, if it increases above this level here, that is enough basically to speculate that the price will continue to increase and continue to correct. Where is it going to correct to? I mean, we have a resistant level here, we have a resistant level there, and also here as well, we also have a resistant level. So there's different areas that we can potentially aim for. But if we are going to see the decline no longer fall any further, then that's 65% momentum being regained there. Now, let's say it does continue to decline because we do have some indications that it could decline from technical analysis. Then we just want to see 65% of the larger price movement, in which case 65% will be slightly lower, basically there, ladies and gentlemen. So again, the difference between these two entries levels, of course, there is 100% a difference between the two, but there's not a massive difference between them. Okay, so keep that in mind. There's not a massive difference between them. Now, what about the high-low index? Because keep in mind, ladies and gentlemen, there's also certain factors you can look at to help you back up the indication, to help you achieve a bias over whether we are indeed going to see upward price movement or downward price movement. Because we've got factors in terms of technical analysis which indicate that actually, unless momentum is regained upwards, that could still continue to decline and still form a retracement. Whereas if we're looking at fundamentals, there's a lot of things which are indicating upward price movement. So what could you look at, ladies and gentlemen? One thing that you can definitely look at is the components. Now, this is keep in mind the American session hasn't opened yet. Okay, so the American session is still closed. This is still pre-hours trading. So even though that we saw that massive upward price movement, okay, for the Nasdaq, we saw a big upward price movement for the Nasdaq. Regardless of that, all of the stocks here that we can see, which are within the Nasdaq, are all red. Okay, so that's conflicting signals there. We don't want conflicting signals. We want signals to be hand in hand, both indicating in the same direction. Now, what you're going to say to me, what do a lot of traders do? A lot of traders will look at this, at least the most influential stocks. So let's say they may say all stocks which are 1% and above. Okay, so here, these stocks, 24 stocks, 1% above. If 65% of those stocks turn green, then I will have that as an indication of upward price movement. They don't all need to turn green, but at least a majority, for example, 65%. You can adjust that depending on your personal take. So that, ladies and gentlemen, at the moment is all red. At the moment, regardless of the fact that Nasdaq increased, that's not yet indicating upward price movement. That's still indicating downward price movement. Now, what else could we look at? We can also look at bond yields. Okay, bond yields are lower. That's a good thing. Lower bond yields, ladies and gentlemen, that indicates that the market will actually may potentially see support for the stock market. What I will say though is that even though it's lower, there is some attempts here to increase upwards, but nonetheless, it's lower, ladies and gentlemen. I'd rather keep it black and white for everybody, simple for everybody. It's lower. Bond yields are lower. So that's also an indication of downward price movement. Now, what else could we look at? The other thing I would look at, ladies and gentlemen, is the VIX. Now, to get access to the VIX, you can look at FinViz, for example, and look at the VIX. Okay. Here, ladies and gentlemen, we got, let me see if I can zoom in on this actually. Can I zoom in on this? No, I can't zoom in on it. What I'll do is I'll look at futures and show you the VIX. There you go. The VIX is there. Okay, plus 7%. What should everybody know? The VIX, ladies and gentlemen, is a risk indication. Now, a risk indication, basically, if it's an indication of risk is increasing in value, it means that people in the market have a lower risk appetite. Okay, so the VIX increasing means that there's actually more pressure on the stock market. But the question is, ladies and gentlemen, will the VIX index continue to increase? Because now it's 7.5% upwards. If that starts to decline and go closer to 0%, or even better, go into a minus, that starts to indicate that that scenario is changing. We're no longer looking at a decline, starting to looking at an upward price movement. If we see something different, if we see that this continues to increase, it continues to indicate, should we say, downward price movement for the US stock market. Now, if we're looking at global indices, European indices are trading higher. Asian indices are trading lower. US indices are also trading lower at the moment. So it's kind of mixed. We don't yet have a clear outcome in terms of the VIX index, in terms of global indices. Now let's go to a 5-minute time frame and look at the Nasdaq, because I'm sure we've seen a lot of volatility. Let's go actually to 3 minutes, so we can see clearer that up and down price movement. So we saw that shot upwards. By the looks of it, it hit a lot of people to take profit because it declined very strongly afterwards. I mean, it increased in value by 0.80%, and then it decreased in value up to 1.25%. So that's exactly what I'm talking about, a lot of volatility. Now, we're still below the 200 bar moving average here, ladies and gentlemen. This is a 200 bar moving average on a 3-minute time frame. So that gives us a bias of downward price movement. If it increases above here, there's two indications. Number one, we've got a bullish breakout. That's one indication of upward price movement, a bullish breakout, because we're breaking out above the resistant level we can see here, here, and here. Number two, it's above the 200 bar simple moving average. That's another bullish indication. And another thing I also will mention, if we go to a 15-minute time frame, this even though on the 3-minute it looks like a lot of downward price movement, and it is quite a lot of downward price movement on a normal day, because this week isn't a normal week. But nonetheless, this is still a higher high, and this is still a retracement, which is got a higher low as well. So there's still a lot of indications of upward price movement, but just very simply a loss of momentum of today so far. But if we break above there, that could be a signal, a potential signal of where the price and buy signals may restart to gain upward price movement, especially if the low inflation rate continues to have that effect on the market. So that's in regards to the Nasdaq, ladies and gentlemen. Somebody says if we can look at the Dow Jones. Of course, I'll look at the Dow Jones. Somebody also said to look at gold. I will look at gold. If people have questions, feel free to ask. I can see somebody here saying, what is the best performing currency of the day? It was the Japanese yen. Let me check though, because we've seen a lot of volatility since then. Okay. Best performing currency of the day is the Swiss franc. Second is the Japanese yen. Third is the euro. The worst performing at the moment, like I predicted at the very beginning of the session, is the US dollar. Okay. Now, actually, I'll show you, ladies and gentlemen, if you go to YouTube, okay. So let's go to our YouTube channel. It's very important that you follow our YouTube channel because there's a lot of very interesting videos, ladies and gentlemen. And I'll give you an example. Now, if we go here, which will be the best performing currency in 2025? Which will be the best performing currency in 2025? Now, that was back in February, approximately. Maybe it was January. I can't remember. That's going back quite a long time here. What currency what was stated here? Okay, and I'll show it to you. I'll let it play. Which will be the best performing currency in 2025? let's take a look at the facts. So far, best performance the Japanese yen. It's increased by 3% so far. Talking about the Bank of Japan, the only central bank which is expected to increase interest rates. We actually speak about the Japanese yen safe haven currency and the characteristic as a safe haven currency. We give the facts as to why. Okay, the best performing currency of the year is jointly together the Japanese yen and the Swiss franc. The Japanese yen is increased by 7.20%, ladies and gentlemen. 7.20%. And that's a video which was uploaded 3 months ago. 2 to 3 months ago. I don't know the exact date. Anyway, so let's go to gold. Sorry. Somebody said that he wanted us to look at the Dow Jones. So let's look at the Dow Jones. Let's go to today's price movement. There we go. Let's get rid of these lines here. Very similar price movement. We're closer to the 200 bar moving average. 200 bar moving average and the retracement, if we're looking at wave theories, could decline all the way down to here. That's again still in line with the 200 bar, the 75 bar EMA. So it's the exact same scenario, pointing downwards, but with still indications in terms of the medium term of upward price movement. To be honest with everybody, the performance of the stock market massively is going to depend on the trade policy. Okay, because yes, we've had a pause. That's why we had that very strong upward price movement yesterday, because we had the 90-day pause basically for all countries which didn't retaliate. Okay, the countries which did retaliate, more specifically China, very simply, those countries actually saw additional tariffs. Okay, now we're still hanging on negotiations. Okay, because there's two sides of this. One side is in those 90 days, countries like the European Union, the UK, Japan negotiate and actually make an agreement. Okay, so for example, in the European Union, instead of seeing 20%, they may decrease it to, for example, 14%, 13%, 12%. Okay, and let's say China is well negotiate, okay, and their tariffs also decline, and they come out both in Japan and the US and say we've come to an agreement, we're both very happy with the agreement, we think it will work very well, etc. That's the ideal scenario for the stock market, because that gives certainty, that gives a positive outlook for the economy as well, and that's something which is massively positive for the stock market. The worst case scenario, the worst case will be at the end of 90 days, none of those countries, or at least the main countries, were able to negotiate. They don't negotiate. They fail to come to an agreement. Tariffs are again imposed, and China as well refused to negotiate, and their tariffs remain extremely, extremely high. That's the worst case scenario, in which case, actually, the stock market could decline even further than what it has recently seen in terms of lows. Because the lows that we have seen recently, ladies and gentlemen, I mean, for the Dow Jones, it's just under 36,500. For the NASDAQ, I think it was 16,000. So just over 16,000, yeah, just under 16,500. So it depends on what's going to happen in regards to those negotiations, both for the Dow Jones and the NASDAQ as well. At the moment, though, we're in a scenario now where it could be in the middle of the retracement. It could swing in either direction. We could see the retracement continue and then increase upwards, or we could see potentially momentum regained now, or maybe something really negative will happen throughout the day and it just will keep on declining. If it breaks below the 75 bar exponential moving average, then sell signals really start to materialize according to that indication, especially if also we break below the 50 on the RSI as well. Now, let's also start to look at gold, because we've got some individuals asking in regards to gold. Gold has definitely benefited. We said that was the ideal scenario. It has benefited. We can see we're trying to form a bullish breakout. We're above the 200 bar moving average, 75 bar EMA. We're above the 50 and 75. The only thing I will say here is that there's slight divergence. Let's go into a 1 hour time frame to see if it will give us more information on that divergence. So yes, we can see there's divergence here. We actually have here, you can see the highs are higher, okay, on the actual price movement. But if we look here at the highs on the RSI, it's tilted lower. So we've got one tilting higher, one tilted lower. That's an indication of divergence. So that indicates actually that the price will decline, potentially to the support level that we previously saw there. Other than that, though, ladies and gentlemen, in terms of momentum indications rather than oscillators, the indication is that the price will continue to increase in value. Now, if because of that, should we say those mixed signals, then what individuals can do if they wish is, if they're not sure whether to buy or to hold, is they can wait for momentum to be regained, very simply. So we've got the high here, we've got the low here, okay, and 65% is basically here, ladies and gentlemen, okay, 65%. So if the price increases to there, you can slightly increase it to the breakout here as well, if that's something you wish to do. So you're basically saying, I've got that bullish outlook, but at the moment it's declining. Before entering the buy, I want momentum to be regained, and then I'll trade with momentum rather than trading against momentum, should we say. But if the price is going to decline below here, for example, we're below the 200 bar EMA. We're also below and seeing a bullish breakout as well. Now, I've got 3 questions. So I'll quickly answer these 3 questions. So I completely agree with this individual. For me, the real conviction to step into the market will be if the US and China have gotten a trade deal. We mentioned this. That's going to be, of course, a big factor. It's good to see that he's making some money. He says that he's making money, so that's good to see. Also, I've got another individual here. If we can look at Ripple and Bitcoin, on our MT5 here, we don't have Ripple and Bitcoin, ladies and gentlemen. You have to have one of our crypto CFD trading accounts. Those we do on different sessions. But what you can do is you can sign up on our website, sign up to our webinars, our live analysis, and you get a lot of free material in regards to cryptocurrency CFDs. Another question. So somebody says the major is a time to wait now. If you're going to wait for momentum, then okay, yes. But you're mentioning wait to see if China and the US have a trade agreement. Well, to be honest, traders, they always prepare trades for both directions. So to be honest, as a trader, of course, if you're a portfolio holder, then yes, you definitely want to wait and see scenario. But if you're a trader, you can speculate in either direction. So traders don't really care if they come to an agreement or not. What they care about is being able to determine the price movement, whether that's downward price movement or upward price movement. So I've got another individual who says if you can look at a currency pair. Yes. Best performing currency pair of the day is the US dollar against the Swiss franc. So let's look at the downward price movement. Wow, look at that downward price movement. I've got the day separators. So the price of the Swiss franc against the US dollar increased at the very beginning up to 2.55%. That's massive, 2.55%. Slightly retraced, nothing more than a retracement so far. Still minus 2%, ladies and gentlemen. Very clearly below the 200 bar simple moving average. What I will say is be very cautious of this resistant level. I would say slightly higher than the resistant level, because that will probably bring it in line with the 200 bar simple moving average as well. Be cautious of that. If it reaches it, will that trigger resistance indeed? Somebody says, can we look at the US dollar against Japanese yen? Yes, of course. US dollar against Japanese yen. Let me put that on the screen. There we go. Very clearly below the 75 by EMA. We're below the RSI as well, with no divergence on this case. So that's clear, a clear bias of downward price movement for the medium term. So let's see if potentially that actually does materialize. Somebody says here, can we look at a currency pair which doesn't include the US dollar? Yes. We've mentioned the best performing currencies is the Swiss franc and Japanese yen. So let's say, for example, we were looking at the Japanese yen. The worst performing currency of the day, other than the US dollar, is the Canadian dollar. So we can look potentially at the CAD JPY, for example. There we go, CAD JPY. Let's go to today's price movement. You can see now that that has just, for the very first time today, dropped below the 75 by EMA. That indicates downward price movement. We're almost below the 50 on the RSI. We need to be below in order to get a clear signal. We're not yet below, but if we drop and see a breakout downwards, then we will start to become below as well. Support level can very clearly be seen here as well. So getting close to there is something we want to avoid as well. But there's plenty of downward price movement before we even get close to that level. So that's in regards to the CAD against the Japanese yen as well. Just want momentum to be regained. For example, we can look at it on here as well, on the 3-minute time frame. We can see that upward momentum. We've got two scenarios. We could either look at 65% momentum being regained, which is here, or we can look at the breakout, which is here as well. Key thing will be, though, for it to drop below 50 here on the RSI, which we can see is attempting to do. So, ladies and gentlemen, that brings us to the end of today's session. I can see I've answered most of the question. I've looked at all of the assets that people were sending me, because we had a lot of people sending for gold, the Dow Jones, the Nasdaq currency pairs. We've looked at all of those. A very, very interesting announcement. We're seeing a lot of volatility. Like I said, let's see how it works out throughout the day and for tomorrow as well. Keep in mind also that next week we will have earnings season. That will create a lot of volatility for the stock market also. Now, that's the end of today's session. Hopefully you enjoyed today's session. Hopefully it was educational for you all. Keep in mind, ladies and gentlemen, that we have every single week free webinars. We provide webinars for you free. We provide analysis for you free, and analysis articles as well. Keep also in mind that we have copy trading, and we also have a cryptocurrency CFD trading account where you can trade 24/7, so even on weekends. So that's it for today, guys. Enjoy the rest of your day. Good luck. Trade responsibly. Trade safely. In the meantime, though, goodbye.